Hey guys, what's going on? It's your boy MerkFX, and today I'm going to be talking about a stupid, simple strategy that anyone can master. Like, it's genuinely so simple. I've gotten funded with it. I trade on my live account with it. It's great. Because I know I was that person that was blowing their funded accounts. I couldn't find a strategy. I was strategy hopping. Like, I was trading on like a 15-minute time frame, multi time frame analysis. Like, it was all too much. Like, I was spending so many days, like hours on end, and I mean hours on YouTube. Just what's the next best strategy? What strategy is the best? What's the best? And I've come across this one, and I think it's great. As I said, I've been funded with it. I traded my live capital with it, and I make good money from it. So let's get into it. Alrighty, we can see here we've got a bullish scenario and then a bearish scenario as well. So it's a pretty simple strategy. If you know a little bit about Forex, then this will be perfect for you. All right, first thing I do, I mark out my structure. As we can see, we've got a low, got a high, right? Got a higher low, higher high, right? Let's pretend from this point on, you can't see any of the structure. You can't see this part here. Once we mark this out, I can see, like we can all see that there's a break of structure to the upside here. And then we've even got a bit of liquidity resting here. So we can say we got a liquidity sweep here as well. Simple, right? And this is all in the 4-hour time frame. It's super simple. At this point on, from around probably this candle here, I'd mark out my Fibonacci. So I do a 0.75 Fibonacci, so I get a 3-to-1 risk to reward. So if I'm using a 10K account and I risk 1%, that means I'm risking $100. Um, it means I'm making $300 per trade. If I've got a 20K account and I'm using 1%, so that's $200, I'm making $600. That's risking 1%, right? Imagine risking 2%, which means on a 20K account and you're risking 2%. So you're risking $400. So times three, 400 times three, you're making $1,200 per trade. Look, like you're not going to win every trade, obviously. Like this is Forex, like you can't win everything. But $1,000 plus per trade sounds pretty good to me, mate. Anyways, so 0.75 fib. We get tapped in at this point on, so we can see I've got like I think it's 3 rules, so I'll list them out. So I've got a break of structure done, right? I've got a fair value gap. I can see fair value gap here, big fair value gap here, fair value gap here, right? That's done. That's number 2. What this fair value gap does, we can see it's like an impulsive break of structure, right? It's not just some like small takes forever break of structure or whatever it might be. And like there's like I mean, look at this break structure. It's so slow. Not that. Like it's an impulsive break of structure. You can tell that there's like institutions involved and there's just lots of liquidity. So break of structure, fair value gap, and then a liquidity sweep. This is only really relevant if like if there's such an obvious continuation, like let's say it's like this, and price is just shooting upwards or it's just falling down, then liquidity sweep isn't as important for me, but it's still great to have. I think it's still one of the key components of trading. Anyways, we get tapped in, price runs up, we hit that take profit, and as I said, if you're risking 2% on a 20K account, that's $1,200 for you. So it's as simple as that. All right, we've got the exact same scenario as the bearish scenario. This one's a little bit different. So we can see, let's mark out our structure. So we've got, just clear this out. Alrighty, we've got a high here, a low here, a higher high here. Even though, I mean, it's not really a high high, it's pretty much the same, but you get the point. And then we've got a low here, right here. So as we can see the price is moving down. We can see there's a break of structure here that fits one part of the plan. You can see that there's tons of fair value gaps here, right? So all these fair value gaps. That's a strong leg. That's institutional involvement. I mean, retail traders, me and you can't do this. It's not us. You can tell that banks and market makers are pushing this. So we've got a liquidity sweep here. Great. So that previous high price came up, swept that liquidity, those resting orders, and then just shot back down. Got our breaker structure here as well. And then again, probably from maybe this point on, I would look at setting my order. So I set it from this high here to this low here, right? The Fibonacci is probably around this point. and boom. So price moves its way up, we get tapped in, and then price shoots its way down. Guys, I'm telling you, it's as simple as this. Like, there's nothing more to it. There's generally nothing more to it. You just look at the significant swings, right? Is there a break of structure? Is there fair value gap? And like 90% of the time, is there a liquidity sweep? Simple as that. All right, so let's use a bit more of a real life scenario. So let's say we've got structure moving like this, right? We can see obvious bearish momentum, prices moving downwards. Let's mark out our structure, right? So we've got high here, a low here. At this point, I wouldn't really consider this a high because like I'm looking at this range here, not really looking at really what happens here, this. I'm waiting till one of these points pretty much gets broken so I can determine, okay, so this point got broken, high, low, high. You know what I mean? So got a low here, and then a high, lower low. And from this point on, we can see, okay, we've got a liquidity sweep here, which is great. Got a break of structure here. We can mark out our fib. This point here. Price moves around a bit. We get tapped in. We shoot down to take profit again. Risking 20k account, like making 1,000, 1,200 with 2% risk. Crazy, it's good money. And then we move on to the same thing. So we've got this trade, okay, whatever, +3. It's great. You can see prices moving even further down. So we've got a lower low. So price is still moving down. Sorry, lower high, lower low. We've got a break of structure. And again, we've got a liquidity sweep here. We've got resting orders here. Come in, like grab that liquidity and then shot straight back down. From this point on, I would set my order. Price moves around a bit. We get tapped in at this point. Then price ultimately makes its way down. Hit take profit. Another +3 reward. It's that simple, guys. Do a bearish scenario as well. Bearish scenario, right? We can see we got low, high, low, high. From this point on, we got a break structure, no liquidity sweep, but price doesn't really make its way down to our 0.75 fib level. So that trade is just a miss. Just missed that trade. There's nothing more to it. Keep going. So we can see here we got a break structure, low, high. Again, there's no liquidity sweep, but what it is, let's say we take that trade. So we take that trade up at this point. Oh, sorry, I've marked this out wrong. So from this low here, trade, put our box in here. Look, so we get tapped in, right? We've got high, low, high, get tapped in, then we ultimately hit stop loss. That can happen. Like, there's no doubting that. This is Forex, anything can happen. This win rate strategy, I average around 35. I had a really good year this year, but 35 is probably the like the normal. We've had a loss, and it is what it is. But we keep moving on. We can see that price is still moving up. You can even see there's a bit of a liquidity sweep here, which is great. So we've got this low here, and then we've got this high here. At this point, I'd set my order. Price moves around a bit. We get tapped in. Tapped in at this point. Price hits take profit. That's it. So of course there's winning scenarios. Of course there's losing scenarios as well. There's break-even scenarios, but that's it. The more you let your edge play out though with your win rate, the more profitable and the more money. So let's hop into some live trading examples. All right, so we've got our live example here. So we've got Chef JPY. So first thing we do is we mark out our structure. So we've got a low, high, a low. From this point on, I can see, all right, have a break of structure here. We've got a fair few fair value gaps here. Tongue twister. Fair value gap, fair value gap, fair value gap. Enough for me, and it's obviously like it's just a strong leg. We can see we've got, I mean, there's a bit of liquidity here that we've taken from like this sort of overall range. Not so impulsive. We can also see we got tiniest liquidity sweep. Either way, what I would normally do is I'd mark this out, but I wouldn't take too much concern for it because I mean we do have pretty bullish structure. From here, I would mark out my swing points. So from this low to that high, and then the 0.75 fib range. That gives me a pretty equal 3 to 1. Sorry, 1 to 3. All right, so we let price play on. So we're happy with our order. Marked out our structure, break of structure, liquidity sweep. Continue trading. See here, yep, we've been tapped in. And we let price do its thing. So price moves upwards. And bam, that's it. Like take profit, done. Sweet, done that. If we moved on, so that's plus three risk reward. So let's move on. And we can see here actually, all right, so we've got another opportunity here. We've got break of structure to the upside. We've got a tiny liquidity sweep here. And then we let the trade play out. So see, all right, I'm pretty comfortable with this. Marking out this as a high. Then marking out that fib level. Here we go. 3 to 1. That's not so. There we go. 2.99. Close enough for 3 for me. And then we let price play out. And at this point, this is interesting because at this point, for me, this trade right here, it's too small. This trade, as I mentioned before, I only want the major swing points. And yes, some could argue this is a major swing point. I mean, you'd be fair. Like the strategy would still work in your favor if you did think that was the swing points. Me personally, it's not. But everyone's got their own style to it. I just rather the big swing points. It's always worked. What we'll do is we'll actually extend this. Extend this to this point on. That's there. Extend it here. So 3 to 1 3 risk reward. That's it. I'm happy with this because this is still the overall moves. This is still the overall major swing. As we move on, all right, price has been tapped in. A slight bit of drawdown, but not so much. And we just let price play out. So we can see here, price is moving its way up. Eventually, we're moving around a bit, not seeing much, and then bam, another take profit. So you can see here within this time period. So this is about a month on the 4-hour time frame, and you've got 28 pairs. Like in just 1 month, this pair you've hit 2 winners in a row. That's 6 risk reward, risking 2%. That's 12% just on these 2 trades. We can see here. So we've got like obviously bullish momentum. Trades have hit. It's as simple as that. This strategy is perfect for those that want to get funded, they want to trade with their live capital, like they want to get payouts, all that kind of stuff. I think this strategy is perfect. It's the perfect swing strategy. If you're still working full time, this strategy, it takes me like literally 10 to 20 minutes a day. I check the charts once in the morning, I check the charts at night. So it's a stupid simple strategy. I can't even stress that enough. Like that's literally all there is to the strategy. So shoot me a DM on Instagram if you've got any questions, like, subscribe, and I'll see you in the next one.